Welcome back to the strategy stage. I'm Christophe Langlois. I'm the global marketing lead Fintech and Developer Ecosystem at Finastra, and I'm delighted to be joined by my colleague Angus Ross, the Senior Vice President of BaaS, the Service and Technology Alliances. In this session, we will be looking at what the next generation of financial services unbundling means for the industry, and we will discuss the opportunity and threat to all banking as a service participants. Before we start, if you have any questions for Angus or myself, please put those in the chat and we will do our best to respond. Also, feel free to message us directly using the People tab on the top right of your screen. And lastly, before we start, congratulations to the FinTech Talents team. It's really an honor to be part of such a brilliant speaker lineup from the likes of the World Economic Forum, Marketa, Shopify, Microsoft, Seattle Bank, one of our customers, and special shout out to some good industry friends of mine, namely Theo Lau and Brad Lamer from Unconventional Ventures and Mathieu Soulet from BNP Paribas. So Angus, hi, first of all, how are you doing today?
Good, thank you, Christophe. How are you?
I'm in the zone already. I'm good. Thank you very much. If we had more time, actually, I'd love to talk to you about family, dogs, the great outdoor life in Montana, and the Glacier National Park. You have a rather extensive international experience in Australia and the US, again, just to name a few countries, in fintech with the likes of Deloitte, Westpac, Citigroup, Telstra, and Finastra, obviously. And you're passionate about transformation, which again resonates with me as a Frenchman. So the first question, if you don't mind, can we start a bit and find out more about you and your key role at Finastra? It's key because at Finastra platform, banking as a service and open finance are so strategic to us and to our brand. So who are you and what do you do for Finastra?
Cool. Thanks, Finastra. Thanks, Christophe. It's great to be here. And you got me excited because I thought I could spend most of my time talking about the great outdoors in Montana. But as you said, let's save that for another time. So first and foremost, I would definitely like to consider myself a customer-obsessed banker. Right? I've spent half my career inside banks like Citi and Westpac Banking Corporation, driving their customer and digital programs. So I would say that's hardwired in my DNA. On either side of that industry experience, I was a management consultant. So I started my career quickly leaving the legal profession and jumping into managing consulting with EY. That was way back during the dot-com boom and bust, if some of you can remember that time. And then most recently, on the other side of my industry career, I was with Deloitte, as you mentioned. So a partner in the US leading their digital transformation practice across financial services. And then about 3 months ago, I would like to say I made the very conscious decision to join Finastra. At this stage in my career, I would like to think that I've got the choice and the wherewithal to really help shape and drive what's happening in the market versus just watch it from the sidelines. And so I was extremely excited to make the choice to join Finastra. It's a huge pure play banking tech organization with around 10,000 banks. And it's a privilege to be really spearheading the opportunity around embedded finance in partnership with our customers and our go-to-market partners. So long-winded way of saying it's great to be here and I'm looking forward to the conversation.
Oh, thank you for the intro. Yeah, it's great to have you on board. Contextual finance is more than noise in a distracting place. Do you agree? And if so, does it represent a real opportunity, but also a real threat to financial institutions and beyond?
Yeah, you'll soon work out that I'm not a politician, so I'll answer the question first and then give you the long-winded answer. So, yes, I definitely agree. You probably never hear a politician answer that directly. So I think the biggest question is it an opportunity? Is it a threat? And then will banks become dumb utilities? And I think it's all three of those things, and depending on your lens. So I always start by saying, if you accept the reality, and I see it as a reality, that retail and corporate customers are increasingly wanting to access their financial services in context, right, in touch points that are more relevant to them than banks, then the opportunity is to follow those customers there. And I deliberately differentiate retail consumer customers with corporate and wholesale customers, because there's a very different embedded finance proposition for them versus what we hear in the headlines a lot, which is really around the B2C embedded finance opportunity. And so I see sort of three groups of winners and losers. So firstly, FS providers, and I'll use banks generically, who work with those end touch points, right? Whether they own them or they work with them or they work with embedders to them, they will definitely win, but only if they secure priority placement, right? If they work with a retail point of context and they're one of 1,000 banks that plug into that, then they will be a dumb utility. So we spend a lot of time talking with our customers about embedded finance isn't about embedding finance. It's about shoring up priority consumption of your embedded finance. So consumption is the operative, not embedding. Banks that don't follow their customers there naturally run the risk of losing them, or if they're late followers, will lose out on that priority placement. And then the last one is, it's really important to think about not just making money and selling your banking product or service in context. You can also make money as an equity participant in these new marketplaces. So several of our customers that we're engaging with now, it's a dual proposition. One, let's embed our product and services in context, but let's actually inform the broader marketplace and take a clip on that equity interest on the marketplace. So high level, from a traditional banking perspective, yes, BaaS potentially disaggregates the services they offer if they don't actively work to shore up placement. If I use an example like a manufacturer of stationery product, right? There was a risk years back that Amazon was going to disaggregate them from their products and their sales channels. If you look at what Amazon offers now to those customers, right, or those manufacturers, you can sell through Amazon as a point of context, or you can actually sell through the many and varied Amazon marketplaces to broaden your reach. Contextual finance is exactly the same thing, different product, service, right, potentially different channels, but the key opportunity is to follow the customer to those point of context. Hopefully that answered the question.
It did very well. And you mentioned, we always mention the relevance of banks. You said becoming utility companies, maybe losing part of losing the customers at some point, or the risk of doing so. If you look at some of the new players, I mean, anybody could be a player, but the big tech retailers, manufacturers you mentioned, could be also supermarket, fast fashion chain, or football clubs even, why not? Do you think it will translate into a further erosion of the incumbent hold on the customer? Again, so I'm thinking Tesla with embedded insurance, Uber or Starbucks with embedded payments, Klarna & Co, embedded lending, and so on and so forth. So do you see that again as a major risk in terms of customer relationship management and customer ownership, if you wish, from the incumbent banks?
Yeah, it really depends on your lens, right, and how much of a control freak you are, right? I think holding the customer is an illusory perception, not a reality. No one holds the customer, right? They effectively shop where is relevant for them. And then historically, and even up till now, retail and corporate customers shop directly with their banks because they have to, not because they want to, right? And there's plenty of cliches around that, right? If I'm a large end importer and need to finance my purchases, I need to work with my primary bank or banks to organize those facilities, right? It's a disrupted experience. If I can access those facilities, or even better facilities, in context when ordering my goods, that would be a lot more contextual and relevant, wouldn't it? Right. And so if I look to the point of let's call it relevant contextual finance, right? There's no reality of holding the customer, right? Financing imports via my procurement logistics ERP, opening a transaction or a line of credit when I'm onboarded via my HRMS. If I buy property, pay my bills, pay suppliers, get paid as a property developer through a property development app, you would argue they're a lot more relevant and contextual, right? And so I think it's not about an issue of holding the customer. It's about being relevant and valuable in a point of context. And I think it's extremely important, especially as we're evolving our understanding of embedded finance. There's a difference between one-to-one and many-to-many, right? And a lot of, I would say, early participants are looking at how do I get my 1 or 2 or 10 banking products or services into an end touch point that I own, where I am the only participant in that touch point. And I think that's a fool's errand. If you look at the importer example I gave earlier on, if they've got a primary banking relationship that's extremely valuable, and their procurement, logistics, ERP offers another single banking relationship, it's not that compelling for me. However, if that procurement, logistics, ERP offers me an open marketplace where I can get more banking products and services at better rates, that becomes compelling and disrupts my incumbent relationship. Hopefully that answered your question.
Indeed, yeah. But we come back again to if we go even back like a few years, a long time ago, it's the sharing economy. It's all about creating value, conveying that perceived value, and convincing the customer, wherever they are, of the value of transactioning or joining a platform, right, versus staying where they are at the moment. So I think there's a technological element, right? But there's also like other components. You mentioned convenience and user experience. There's trust as well, which I think is a great topic, potentially in favor of incumbents and banks, right? And trust could be rational trust and emotional trust, at least. And there's the third component, convenient trust and data, right? The ability for brands, a brand like Apple, for instance, they do that very well, to leverage and to develop a strong data acquisition model. So again, talking about those, first of all, do you agree? Those are some very fundamentally important elements, if you wish, or pillars of a successful embedded finance strategy over and beyond a bank or a financial institution. And what is the strength, again, of a traditional bank then in those areas?
Yeah, look, shortly, yes, definitely agree, right? Trust is paramount. Appropriate context is critical. Relevance and value, right? All the things we've talked about. Look at analytical CRM of the last 5 or 10 years, right? The importance of context, placement, prioritization, value. It's no different when you broaden the aperture and you look at embedded finance and new touch points, right? I think there's a risk that we all go, look, it's a commodity product. To make it valuable to the customer, you just need to expose it in a completely different channel. And if you look at what Tesco Bank did recently, where it actually withdrew its checking account offering, right? It formed the view that it wasn't a valuable proposition to its customers. So even though many were opening checking accounts, less than 12% of them were using it as their primary bank account. Now, that as bankers know, the primary bank account that takes the salary credit is the anchor product that then attracts other things. So the likes of Tesco have decided that a transaction account isn't a compelling proposition for them financially, but equally not relevant for their customers. So why expose it in that point of context, right? And so I think the opportunity for the industry is really to look at, based on the point of context, what is relevant and contextual for the customers at that point of context versus just trying to spam them with different banking products and services in that point of context.
Very good point, yeah. So customers or clients like you and me are not necessarily ready for the bank of Tesco or the bank of Walmart or Target to that extent, you think?
Again, it comes down to what's being offered. Like taking a binary product perspective in those points of context, and again, this is just my opinion, right? And based on what I've done in the past, but equally what I'm hearing from our customers now, right? Taking that binary, one product, one customer, one channel, isn't contextual. If I'm in a Home Depot in the US and I'm buying $20,000 worth of equipment to do a renovation on my investment property, opening a checking account at the point of sale in Home Depot is not a relevant experience. Getting access to a buy now, pay later or a financing offer, that is relevant, right? And so I think the opportunity for the industry is when they're working with the point of context, get an understanding of what bundling, right, what value proposition will resonate at that point of context with the customer, and then quickly test and learn to see if it actually resonates. Tesco obviously did that with its checking accounts, open and then close them. The no difference is, and I keep giving sort of these retail examples, but the other example that was increasingly seeing is the proposition that a vast number of the global banks or banks globally do not want to manufacture their banking product anymore. They want to procure it at wholesale rates and then focus on deepening customer relationships and reselling product. So there's an embedded finance opportunity for large global banks to wholesale their products and services, whether it's FX or liquidity management or cash management or receivables management, no different than Goldman's is doing with TXB. There's a real opportunity to create a wholesale proposition where the vast majority of credit unions, development banks, regional banks can then tap into that marketplace and focus on driving their direct and indirect customer relationships with those products and services. So there's a retail banking as a service proposition, which we've spoken to about a fair amount. There's equally the wholesale marketplace proposition, which we're definitely seeing emergence.
And that's so thank you for that, Angus. When we talk about embedded finance, maybe some people think, again, major players. So we're talking like very large, maybe global financial institutions, for instance, not even talking about the hyperscaler and the retailers and so on and so forth. You mentioned credit unions and building societies. So what's the opportunity for those smaller, yet financial institutions with a lot of gravitas and great customer relationships at the regional or local level?
Yeah, I think the opportunity, again, if I'm a regional bank in one of the African countries, for example, I can't spend a whole lot of time deepening relationships with my customers and also building and managing a best-of-breed technology stack to support that, right? Both of them are costly exercises. And like the retail industry many years ago, you need to focus either on product innovation, customer relationship, or pricing. You can't do all three of those. So finance is exactly the same thing. So if I'm a credit union or a development bank in Nigeria, for example, I really want to focus on one, sourcing best of breed product that's best of breed priced, and then really managing the relationships I have with my corporate customers or my retail customers. So the opportunity for embedded finance is to provide marketplaces where, as that development bank, if I want to offer micro lending to small business customers, right, I can tap into a marketplace that offers that's embedded. And so I can focus on those direct customer relationships. Equally, if there's a fintech in Nigeria that will expose me to a whole lot of points of context, right? I should be able to tap into a wholesale marketplace for products that then I can then redistribute with my own branding through that fintech to those end retail points of context. So I think that's the opportunity, understanding the difference between manufacturing and wholesaling of financial services product versus focusing on distribution, either direct or indirect.
Yeah, fascinating, and thank you for taking the example of Africa. Very few people know I was born in Africa, but not Nigeria, Ivory Coast, close enough. During the pandemic, and I'm going to quote Eli Rosner, our Chief Product and Technology Officer, who says, "Our clients' 5-year roadmaps were effectively condensed to months." So do you think that this has kind of catalyzed a new form of agility, a level of agility within financial services? And maybe we're going to see more new or faster pace of change within the global financial services industry, which would have an impact on embedded finance?
Yeah, look, definitely. And I think many banks surprised themselves during the pandemic with their ability to flex and pivot. What I think is important to note is the challenge of competing priorities. So during the pandemic, and we're still living it, right? It's not like it's over. During the pandemic, banks really were in survival mode, right? Which meant that they could focus explicitly on the things to survive and all the other, I call it BAU priorities, became second priorities. So their agility was actually a byproduct of just focusing on a few survival mode actions, whether it was providing stimulus funding to recipients, right? Or whether it was significantly reducing costs, whether it was working out how do you service customers while closing branches. All of those things focused the aperture and made them agile. In the new normal, whatever that is and whenever that is, the aperture will broaden again. So all the competing interests will return. Things like regulation, cost reduction, profitability, tech data modernization, deepening customer relationships. All of these are BAU competing priorities that we see on a daily basis. And the question is, where does contextual or embedded finance fit within those competing priorities? Because their ability to harness those opportunities is directly proportionate to where it is as a priority. If it's equal to the other 6 things I mentioned, then the pace of adoption and flexing to that will be significantly compromised against those. So I think ultimately it comes down to a bank or an embedder or a retailer have a really good sense of where contextual finance force ranks as a priority. And if it's close to the top, obviously working with the appropriate orchestrators to help accelerate that.
Yeah, that makes sense. Yeah, thank you very much, Angus. We touched about the concept of platform and marketplaces, and how important is it for pretty much every financial services firm and bank to have such a strategy, whether maybe in some cases undertaking the big task to create a platform and a marketplace themselves, and or partnering with a trusted partner. Sorry, it's a live thing. I don't know, hopefully you don't hear my neighbors at the moment. It's very loud, sorry.
No, that's okay. I've equally, the HOA lawn care guys have decided to ramp up during this call as well. So between both of us, we've got an authentic call going, I think. So no problem. If I heard the question correctly, it was really around to what extent to the participants, whether it's banks or embedders or retailers, need to focus on platform and technology enablement. Right? Is that correct?
That's right. That's right.
Yeah. As I sort of mentioned right up front, I'm a business guy. I'm not a technologist, right? I like to look at the business opportunity and work back into that. And BaaS is a business opportunity. It's not a technology one, right? Technology will be the enabler of it, but ultimately it's around new revenue opportunities, hopefully more profitable revenue opportunities in touch points that participants genuinely don't own or control, right? And so the question is, how do you enable that? And so I just look at the ongoing or the daily conversations that we have with our customers and our partners. It starts with framing that opportunity. It's not a technology conversation. When I go into a room as Finastra, our customers definitely want to start to think about what products and services will enable this. But we ask them to step back and to confirm, what are we looking to enable? What's the business opportunity? What's the revenue opportunity? How do we stretch that ambition, but then quickly narrow it and scope it to something that's digestible and doable, right? Once you narrow that range of the business opportunity, that's when you can start having the solutioning conversation, the technology conversation. If you've got a very clear view on what you're going after, right, then the role that we want to play as the orchestrator of open finance is to help solve and enable that. Now, naturally, we will bring plenty of assets and accelerators and platforms and APIs to that solve, but equally to be let's call it an agnostic orchestrator, and to expedite that solve, we need to have partnerships that are embedded in our ecosystem, so that we can sit next to a Microsoft or a Google, or we can come together with a fintech like Currency Cloud or Wise, or a service provider like Accenture. To win in this space, right, you need to orchestrate that with our clients. And so as important as platforms and services and connections are, it has to start with a clear view on what you're going after from a financial perspective, the building blocks or solution architecture that will enable that, and then partnering with the likes of ourselves or others to really accelerate and orchestrate that solve.
Yeah, no, thank you very much for that. We said we would talk about the opportunity and the threat again for all pretty much banking as a service participants today. Is there any other area or type of participants you wanted to focus on now at the end of our session?
No, look, broadly speaking, I think having an appreciation of the different participants is important, but there's not one size fits all. So if I'm a bank, I don't need to be relegated to just being a bank in this opportunity. I can be an equity participant in a marketplace. I can work with the likes of Finastra or others to orchestrate and start to prioritize my placement. I can become an equity participant with a retail distribution channel. So I think understanding the different players and where you want to position is sort of paramount. It has to start with I keep talking about the consumption of embedded finance, not the embedding of embedded finance. Participants will only make money on embedded finance if it is consumed. So if I'm a retailer, I need to have a clear sense of what is the upside for me embedding finance and how relevant is it for my customers. If I'm an embedder, right, I'm an orchestrator between the retailer and the provider or the license holder. How do I monetize that and what do I focus on versus boiling the ocean? And then if I'm a traditional license holder or a bank, and I want to retain my existing customers in my existing channels, how do I do that? How do I retain them by helping them access relevant services in context in new channels? And now ultimately, how do I make more money out of the overall marketplace? So understanding those players and what your role in it, I think is critical. And then working with orchestrators, and I'm not talking thousands, I'm talking about a handful, right? Working with orchestrators to enable you to do that at pace is critical. And so there's natural questions around how and when and where do we get started at pace to be meaningful. And that's what we're seeing on a daily basis with our customers.
So that's an exciting area, and we could talk about it for hours or days even. Anything else you wanted to add? Or we covered pretty much everything, right?
Oh, just one thing on closing, right? Because again, if I look at where I'm spending most of my time in the market, right, it's fielding the questions, as I just said, where and how do we get started, right? And I think that's the key answer to that, without giving away the secret sauce, is getting started versus thinking about it for the next 12 months. So rather than boiling the ocean and over-strategizing and overthinking this, actually framing an opportunity, framing a use case, sizing it, scoping an MVP, and actually starting that is what's differentiating early winners from the vast majority of early losers in this space. And I think the other half of that is, who do you do that with, right? Who do you partner with that you can trust? Because I know from a Finastra perspective, there's not one organization that solves all the challenges around BaaS. You've got to pick the few organizations that are best placed to actually help solve that. Naturally, that's why I joined Finastra 3 months, because I think we have a very compelling proposition. So getting started, not boiling the ocean, and equally not spending all your time developing fintech partnerships that don't manifest into anything. They're the key tips that I would have.
Yeah, and focusing on business value first and foremost. And as you said, you mentioned Tesco a few times. So the ability, the willingness as well to test, you mentioned MVPs, and to fail fast potentially and change directions or fine tune your approach and come up with the best possible additional new services to offer your clients. So yeah, no, I think it makes a lot of sense. Thank you so much again, Angus, for this passionate and insightful conversation. And thank you to everyone, of course, watching us. So such a great topic. We could talk forever about it. So I invite you all to keep the conversation going. So please connect with us and share your comments and questions. So here on the platform, but also please feel free to connect directly on LinkedIn. We look forward to more great content. So please stay with us on the strategy stage. As next up, we will look at the ways in which embedded finance can support greater financial inclusion. I don't know if they're going to talk of Africa, but hopefully. And Angus, again, great to have you today. To all, please drop us a note again if we can answer your questions. We'd be happy to do so. So thank you very much. Thank you, Angus, and thank you, everybody.
Great to be here. Thanks, Christophe.